Alrighty, folks, Tom is out of the office today, so I'll be hosting the Bull Bear Binary Hour right here on TFNN. And let's check out where the markets are at right now. We got the S&P is currently down about 6 points. We have the Russell down 7. Dow's currently down 92, 94 points, so working on triple digits there. So we're getting some good moves going on. And oil is heading on back down. It's down 94 cents right now as well. So really some good moves this morning. It's been a great Friday morning, early Friday morning. And hopefully you have been able to take advantage of it. We got, looking over here at copper, we got copper down 0.5% right now. We got gold up, let's see, what is that, $3 on the day at the moment. We have silver is currently up about 0.24% on the day. And what do we got? We got natural gas is down 1.7% on the day. So quite a bit of moves going on. We got corn currently is down 0.75%. We got soybeans down 1%. Looking at over at our FX pairs. Let's see. What do we got? We got pound dollar is currently up a whole 5 pips. We got euro dollar down 29. Euro pound is up 16. Dollar CAD is up 25. Dollar franc's up 16. With the dollar yen up 2. Pound yen up 2. Euro yen down 22. And the Aussie yen down 5. So I get you your morning wake-up call on where the markets are. And let's see what we got going on. With we had the one news trade early in the morning, but that's pretty much wrapping itself up and doing well. And I go over these every day on the Diagnostic Trading Hour. Make sure you have them and you're ready. And we have the U.S. durable good orders for an enter at 8 and exit at 10. So I can bring up a euro-dollar chart for you. Let me get that open. And just look at that beautiful trade right there on natural gas all morning long. All right, we'll go on over here, check out euro-dollar. And here we go. Bringing it up. Slowly but surely. All right, so as we can see, if we measure the 8 a.m. price right here, take it on to the 10 a.m. expiration, we had a move of 10 ticks net difference, and we were looking for a $20 profit, minimum profit on the enter of the trade. So you get in on the trade, you make $10 of that. That's awesome. So they're never, I mean, well, I guess occasionally, but rarely they're going to expire right in the center, which is what it takes to get all $20. So Iron Condor this morning worked out perfectly. Hopefully, again, you were able to take advantage of that. If nothing else, you shouldn't be able to go in and take advantage of that expectation of movement where it moved down 21 ticks on the expectation of 20 and pulled on back. So there was also that expected pullback coming on into play, and it literally was right on cue. Okay, so that gets us what we're looking for with the news this morning. Now let's see what else we can find. Maybe we can do a couple trades. And let's go on over here. And let me pull up. I had oil up earlier. I want to see if it has anything left in it. I think it pretty much punched its clock already, but you never know. Oil has had some pretty massive moves lately. We're getting a lot of spikes on it this morning, but it keeps seeming to want to move down. And so right over here, yeah, so we just had a 5-minute, 10-minute sort of leveled off. We had another 10-minute volume spike that just happened again. So with another 10-minute one on there, makes me want to go in and check out. We're at a, what is that, a 1 deviation level. We're sitting at the 1 deviation level. So really we shouldn't be surprised at all on getting those volume spikes. That's just a matter of how we're going to best take advantage of it. It is top of the hour. Again, that's not my favorite time for these. But we have room to move up. So that's the encouraging part there. Okay, so with that in mind, let me see. I'm pulling up a potential trade that we might be able to do. And let me go over here, and I'll pull this up on the screen for you. But anyway, so what we'll do is we're looking at Nadex, so I'll go into how to get an account on that to try this stuff out if you don't have one yet here in just a moment. But first, let's take a look at the trade. All right, we got crude oil. We could do spreads. I'm probably going to focus on binaries. And let's see. There we go. And it is moving up, so we are getting a pullback. I just don't want to get too much of a pullback before it's all done. But let's see. If we're doing this trade, what you're going to need is you're going to need to pull the chart up on a 5-minute chart. Going to look on over at oil. And then now we've got to pick our strike. So, yeah, 10-minute chart. There we go. So right there, 1, 2. This is really what we're breaking out. How high can we go? We can go to 101.37. So really, that'd be what you'd be targeting. And we do have a strike right around that at 101.33. But I don't expect it to go too much higher. So we'll grab that one just for example purposes and put that trade on. Okay, so we grab that one in, we go in there. But what we're really looking for, what I want to help you pick up on doing this trade, so we would have got in a little bit sooner. We're just trying to go and hop into the show. I mean, technically, what we should be looking at is that when that 10-minute pops up, this is done. As soon as this bar breaks the high, which is where we're at right now, then we look at hopping in the trade. And with the fill price right there, let me pull up the scanner. We'll check this out. And oil can get really volatile right around this point. We're at the 1 deviation level. I would have went on in the money trade. I'm not as big of a fan of the in-the-money contracts when we get those signals right at the bottom of the hour, because I've been amazed at how many of them can get choppy on you. So we're pulling on back up to our trend line from this morning, and so now I want to watch that. So let's put that on over here. We'll draw that. I'm just trying to put the little different pieces that I look at. I got my ABCs of my system, then I got my 1, 2, 3s where I'm going to actually look at the charts. And let's see here. Don't want any of those. And so we can go over, we're basically at a trend line right now. Okay? So we're looking at this trend line over here, and we're pretty much right on the trend line. So is it going to break through it, or is it going to pull on back? And one of the things I like to look at on pullbacks, so I'm giving you one, we are seeing a downtrend. So buying that strike doesn't give us a whole lot of to the upside. We do have a spike striker saying, hey, we're probably going to go up to flat for the rest of the hour. If we do go up, we have an expected range right up here. Let's see here. Pretty much taking us to 101.36, which is right at the 0.7 deviation level. But we did bounce off the 1 deviation, so which is not abnormal to see a bounce off the 1 and go into a 0.7. So there's a lot going in our favor on the trade. Now let's hop around and let's look at another lesson. So I'm just going to put a whole bunch of little things together for you. And another lesson that we can do over here is looking at velocity. So, and it looks like we already hit the velocity markers. But one of the things I've noticed is velocity bars. These are bars that take, these are tick-based bars, basically that take less than a second to move the set, number of ticks to form a brick. So like a 12-tick bar, basically took less than a second to make those 12 ticks. What I have noticed is these are also magnet bars. And when they happen, you go in there, you can literally just like put them together, and what you'll see again and again is that the market will come back, and it will you put it in the middle is what I found, because that's the true open on the bar. So we go right there, we can go over here. Okay, where's the next velocity bar? Like right there, which happens to be the 0.7. So you notice how it went really fast through that deviation level. Right over here, so it's happening, and That's right when it broke through the 0.5 deviation level. Over here, we got a few more of these. So we got one over here, and we got another one over here, right about at this point. And basically what you'll see is you'll see the market push down and pull back up and hit it. Push down, pull back up and hit it. You can put them down at the bottom. That's so tight, though, you don't really, I mean, it takes forever to see it. Or you can put them in the middle. To me, that's a little bit more, gives you a little bit more of an idea. We got within about a tick so far on this one, and we're at that deviation level, so we still have to let the whole thing play out. But we do have magnet prices pulling us up. We got spike trajectories pulling us up. We're bouncing off a deviation level. So there's a lot of little pieces that could work out really well for us. And we have an hour to let the trade play out. The only thing I don't like about the trade is I don't like it's top of hour, because everything moves slower. And then we also can lose. We can measure our expected movement from high to low. We got a pretty good chunk of that already, but we do have a little bit of umph left above us. So right here on the current hour, we have an expectation of 27 ticks. We've moved 19 of those. So we still got 8 ticks left of just expected movement. And that could be up or down, okay? And we've been pretty on the expected moves all morning, so actually exceeding them in most cases. If we did exceed it on the downside, then we'd be definitely breaking through that lower deviation level. We have a low of 101.05, so it'd bring us on down to, 100.98 would be the lower deviation if we were to move on down. And so could always put a hedge on if you wanted to, but yeah, I'd still watch the trade a little bit just to see before we just top in full throttle on a hedge on there. And let's see, I'm just letting it play out. The other thing we can do is we got 5 minute bars. We can look and we can see where stops would be, things like that. And we haven't really hit a lot of stops this morning so far, so let's look at this. If we're going in, and the market's right here, we got a high of 101.72, got a 101.74, so boom, it hit those stops. People go short again. We're going to put their stops. They're going to put them right here. And we'll talk about how they come back up and nail these stops again and again. And we'll see, have we hit the stops yet? If we haven't, that also gives us a little more upside movement potential. Stay there. We'll be back after this break. All right, folks. We'll come on back here to the Diagnostic Trading Hour. And so right now we're looking at oil sort of going slow on us, but it moved on down. It retouched that 1 deviation level. Not too shocked. So now the question is, where does it go from here? So and that's sort of what we're watching to see if it's going to bounce on back up into the last half of the hour. And but right here on the bull bear binary option hour. And seeing where it bounces on up to 101.35 is sort of where we're targeting at the moment. And let's see, average fills on all contracts so far 26, so it may move on up there. And let's see here. Okay. Well, there's not much more to do while we're waiting on that. And what I will do is I will go ahead and set my take profits on the contracts. Okay. So where I'm going to go in and I'm going to want to set my take profits on them to get me out of the trade should the market go up and hit my price level. Okay. And what that would do is basically I'd be getting out at $43 on the trade. Okay. So 101.33. I might even go a little bit deeper than that, but now that we've put down a little bit, I don't have to. So 101.33 actually gives me a little bit of wiggle room. And so just simply go in and set a take profit on there. Let me show you how to do that in case you haven't set take profits yet on Nadex. And bring up the screen. If I can get it to... Yeah, let's turn off this. This is what's causing all the problems. There we go. So right down here, you'll find your position here on the scanner. You go in, just hit the close at market button. It'll pop on up. Then we're going to adjust the price to exit out of the trade at $43. And then we will place our order. Okay? So right there. So when the market moves up, Ideally, it moves far enough up, and then we're able to get out of the trade. So that's really, all there is to it. And there's not really much you can do at this point. You can stare at it, and you can give yourself a heart attack and everything else, but there's not a whole lot you can do, so you just got to let it play out. At a certain point, you could always hop out if you see that, time's burning and it's just oscillating and it's not moving. But you'll be amazed. These things will move $5, $10 in a blink of an eye. So you really just have to let them work themselves out. It is moving back up. It's fighting on that trend line. Notice it's not pushing down real hard. Another thing to notice is, before we've hit this trend line, let's look at the pattern, okay? So it's coming on down, hits the trend line. It works on up on it a little bit, but we got some strong volume down. Light volume up, and then volume pick back up on the way down. Right here, we're working on our way back up. We got some strong volume up and light volume down. So notice the strength of the volume was to the upside. Doesn't mean the trade's going to work out. Doesn't mean it's going to work out fast enough for us. I just, trying to share some of the things that I look at. And, it's a relatively low-risk trade and a good profit potential on the trade. And, you're looking at basically a 1-to-1 on it. So, there's not a lot of stress on it. Really, it's go find the next trading opportunity. What I am most, I guess you could say, concerned about when I look at the trade is I'm going to look over here at the just the pattern and seeing where the market's at. And we need that low broken right there. If that low is broken by enough, by about 101.09, that's where I'd start looking for, hey, you know what, we might be willing to go ahead and break on down here. That's also where remember the spike striker serves also as a mini magnet. It's a short-time reversal trade, but it's also a mini magnet. If it does move on down to 101.09, then I can see us actually flying on down to 101.53. So that's the big move that I'd be like, ooh, if that happens, that could have a little bit of an impact on our trade. And we're talking, about 50 cents move down. So I would be ready to probably hop in either, I don't know if you're trading futures, you're trading spreads, whatever. Look at potentially like a spread, get that one ready on this trade. So how would I trade a spread on here? Well, let's say my trigger was 101. Let's see. On this trade, 101.04. Well, I'll go into exactly how I pick that spread when we get back after this break. Okay. All right, so if you want to go short right over here on the oil contract, so we got a short potential trade setup, we got a long trade setup. We're pushing on down here. We're at the 1 deviation level. Just really, really pushing. Then I'm going to look at all these contracts, and all I'm going to do is going to go, hey, you know what, show me, everything on here. Show me oil. And I want to go, say, short on oil. And so I'll get all these contracts. It'll drop off the buys. And once I hit the sell side, so we hit that, come down here, and then I'll say, let's go ahead and cap that risk out at let's do a 0.5, a 1-to-1, just in case there's one I like that maybe is right on the edge. And that's going to narrow it down really fast. And looking at all these trades, this goes to 230. It has the same profit potential as this trade, but it has less risk. It has the same risk as this trade, but it has more profit potential. And then we have more time than any of the other trades to allow it to move on down. The only trade that really has a significantly lower risk, maybe the 11 a.m., not a lot of time for that thing to move. Then we got the $8 one, but that one has to move, we're talking about, 20 ticks, which isn't huge, but it does have to move about 20 ticks before we really start seeing any kind of money come back. So you could use, basically, there's only two trades to me that would make any sense. I'd either use the 12 o'clock, which gives you an hour and a half, gives you a reduced risk of $10, which means you don't have to have a stop loss. But if the market flies down, then you could actually, make some pretty good money on it with no stop loss. So there's a nice advantage there. Disadvantage is you may just be throwing away $10. Okay. Another potential trade is this one right here. This would be my primary pick. If I'm wanting to mirror futures markets. It's only 3 ticks off where oil is currently trading at right now, and it has the most profit potential comparative to the risk. It actually has the most profit potential of any trade except for this one. It has obviously less risk, and I'm not so much to fight about the risk because I'm not going to stay in a trade till expiration, but I do want to, like, why throw away all that capital if I don't have to? There's really no edge. So there's no reason I would trade the 97 to 107 when I can trade the 97 to 102. I have the exact same floor, so for going short, there literally is no benefit to the 97 107. It makes just as much money. Now I have to put up more capital in the trade. I'm not going to stay in the trade till expiration, but I'm putting up more capital, and there's just, like I said, zero benefit for doing so. And then you could go in, and let's say we're doing this trade, and if you're using the stop trigger, stuff like that, you can go in here and 101.0, say 4, if you wanted to. And then you could say, well, what do I want my stop to be? And you could say, well, don't go any lower than 100.94. Like, that would be an example, okay? And then if you're ready, then you just say activate it. And if you want to understand it, you can explain. It says, when the indicative falls to 101.04 or less, automatically it will submit a ticket for you at a sell limit of one contract at the maximum of the following, either a limit of 10 cents below the current bid price, so when the bid size is 1 or more, and a limit of 100.94 when bid size reaches 1 or more. So whichever one is, higher. That's what it's going to do. Has that set up. So we can go over here, we can look at it. How is that looking? It's oscillating. It's looking. It's watching the indicative. We got to watch, make sure there is an indicative quoting. If not, you can't use it. But it looks like, it might want to keep pushing down. It's really, really just trying to punch as hard as it can into that one deviation. And it has some room, okay? It has some room to move. So it could go on down here. We got about 20 minutes left. And that's where we go over and we look at our, expected ranges. And so on the current hour, it's only moved 7 ticks here. And so we got a lot of movement left inside of the oil contract. I'm trying to pull back this up over here. Yeah, so plenty of movement. And that would definitely be something to sink our teeth into. I'm just trying to figure out the best thing we can look at for. Give me one more second. And I got a screen that keeps popping up in front of me. There we go. Okay. So expected movement of 20 to 30 ticks here. Then there's nothing we can do. Now we just got to sit back. We got to let that at work. We got the buy side working. One of them is going to play out potentially. The other one has till the end of the day. So if it does come down and break, it decides to bump on down. And then we'll be good on that. So we just got to let it do its thing. Okay. So that gives us a look at oil this morning. We'll see how that goes. And set that, use a little pin program. It's nice because then it'll just pin the program off to the side for you. So we'll put that one over there, get it out of the way. And now let's see what else we have. We might be able to do something with. Put these all off to the side. Okay, and shrink this up. We'll go on back over here. Looks like it might move back up for us. We'll see. Okay, let me go ahead now. We'll get some, gold charts up. See what we got. Try to look for some trades this morning. Oh, it's starting to move. Okay, well, maybe we should pull that back up. Look at it, I was just getting bored with it. I think we just took profit. Let's see here. Yep. Hit that, man. We hit that take profit, and it fell right back down. Let me bring that up so I can show you. That happened before we even had a chance to look at it. Okay, so they updated something on the order history, and I don't know what or why, but let me pull up a Nadex chart for you so I can show you. But as you can see, the position is gone. We hit our 43 take profit. So did good on that one. Let me go over here. Like I said, that was just that moved fast. And let's check out where we are over on oil. And let me open up this specific contract, which we were in on the 101.33, 11 a.m. And then let me pull the chart out of the window. All right. All right, so here's our last traded. And you can see it did go up to 43. That's our trade right there. So I went up to 43 on that. We can then go in, we can put a bid. And as you can see, it's moving on up. If you did more contracts, you still have some you could manage. But anyway, so we got in down here, and we were buying the contract at like 25, then 20, and then 15. So sort of layered some on in there. Had an average entry of about 22 on the traded total. And then put a take profit at 43. I got, hey, that's more than enough room if it pops on back up. And it popped on back up. So we went through, we hit that magnet that we were talking about, that mini magnet that gets set by velocities. The market did come back down. It sort of hit its magnet. It was trying to hit its magnet. I thought it might even do it. It was really working on it. There on the spike tracker, but it did not. And just to give you a little perspective here, this bar right here took like 17 minutes. This bar took 27 minutes. So our hour got eaten up. And this is the first bar. So basically, this one bar took half an hour. And this bar took 1 minute. So that was that reversal where everything started flying on back up. And you can sort of see it a little bit better on a time-based chart. And you can see how it's over here and just nothing was happening. Oh, I think I have 30 minutes on there. From yesterday, I was looking at a trade. I think I was focusing on gold or something. Bring that back over to 60. Bring that back over. There we go. And let that populate. And you'll see just how much time, we had nothing going on. And I was like, all right, let's just move to the side and move on to the next trade. Okay, so it comes over here, just oscillating. So I'm like, I add one in when I think it's going up. Feels like it's head faking me, but I'm like, you know what? We have nothing left below us. We're at a 1 deviation level, so let's buy a couple more. We buy a couple more into it. We set a take profit right at the top of the channel of the expected movement. So, which is literally like right up here. Really, 101.41, I guess, was our actual target. We went in and we said, hey, let's sell at 43 on a 101.33. So we had 10 ticks of movement left in there. So 43 was probably, honestly, a little bit too early, but I was just trying to be a little bit conservative on that. And I knew we went down a few ticks. So, like over here, if we put that right in the middle of the range, we're at 101.10. You can see we're already, we drew down like 10 ticks. So if we had an expectation at 33, that really means I only expect like a move up of 33 from the low right here. And the low on this was what? We had a low of 101.05, so I really expected to move up to about 101.38. Okay, so 33 ticks higher than 101.05. So that would have brought me up to right here on my expectations of movement, which lines up with those magnet levels we were talking about. And let's go back. Let's check out those magnet levels. 101.38. So we'll go right here. We're going to look at this, and that's 101.31. Again, we bought a 101.33. So basically, we're getting out right before it hit what we thought it was going to hit. And I mean, you can see if we zoom in on here. I mean, we're like tick off the expected high there. Where we got 101.40 versus 101.43. So we had about a few ticks where we missed it. But we didn't really miss it because, remember, we went down 10 first. So if we went down 10 first, we missed it by a few. We're actually about 7 ticks over or at least a couple ticks over the expected move. It looks like it says from low to high, we exceeded by 2 ticks on the high side on the expected move. So at this point, I'd expect that trade to be done going into the hour, but I need to see something else that tells me to do anything. So right now I don't see anything. I saw the spike tracker tell me to go long. I saw the trend line being broken that told me to go long. And most importantly, I saw that one deviation level telling me, hey, probably need to be ready to go long. And when you put all the pieces together, it gives you more confidence in a trade. And I'm just like, well, we'll see. So now we also have, okay, that potential short, but it never got filled. Remember, we used a stop trigger. I said, hey, if it gets down to 101.04, but it never got down to 101.04 after we put the trade in to fire it off. And, due to the time of day, where the hour is, and on the show, then what I'm going to do, and this is a really helpful function, by the way, in the Nadex platform, you can go in and you can find your tickets by just clicking here and bring them up to the top. So you can just grab them, each one of them like that. So I can go over here, like, yeah, let's go ahead and deactivate this at the moment and close that on down, okay? And get that out of the way. And doesn't mean I can't still do the trade, but I got to watch it. And since it did what I thought it was going to do at the one deviation level, I would not even want to do that trade at all now. I was more prepped in case oil decided to go through and just like punch on down real heavy into a 1.5 deviation level. So I was like, it may go down. If it does, it needs to break this point. And if it can punch through there and we can get some volume in it, then cool, I'll gladly hop in. But I want to see it punch through first. Not only did it not punch through, but it actually ran up pretty hard to the 0.7. And so, being that it's Friday, we may get a lot of movement, but so far I don't see anything happening. I see volume actually dying down, becoming less and less and less on these pullbacks. And there's just nothing that says, hey, you should go ahead and look for a big short trade. I would probably be more adapt to think that, if anything, oil might try to reverse and go back to settlement on this trade. Okay? So if we wanted to look at that, then what would be some of those things? Well, one, settlement is a magnet within itself. What other things could add up to a potential settlement? Let's look at, do we have velocity bars? Looks like we didn't really have those up at settlement. I want to check and see. But this being the settlement price right here at 102 approximately. So yeah, so no velocities at settlement to bring us back there. Now the only thing really left that we could check out on it would be to look at just magnet pricing, classic magnet pricing. So anyways, we'll look at that a little bit when we get back right after this break. All right, folks, welcome back here to the Diagnostic Trading Hour. The good and bad thing about commercials, man. We were ready for another trade there, so props to Joseph for hopping on and taking it by storm during the break there and taking some profits. We were looking at the magnets, and he has been listening and paying attention and taking advantage of it. But had a magnet 101.80, a magnet 102.01, and it pops up. We talked about how it broke the trend, and I'm like, okay, well, we expect this movement to here. I don't expect it to do much more. I'm sitting back, taking it easy. Goes in, sort of hits in, takes my profit pretty quick. Boom, I'm done. And starts chilling out. And then all of a sudden I start seeing this breakout happen. It goes up to 0.5. And backs off a little bit, and then volume just starts coming to town. And I'm like, oh, wow. And 101.80, I'm like, yeah, it's going to hit that no problem. I was like, next magnet, we're looking at all of them. And Joe's like posting them all for me there. We got up to 101.81. And I'm like, okay, well, what's the next one? We got 102.01. I'm like, oh, it's going to go right to that. And it pops right up to it. It hits settlement. They dump off all their orders. Bunch of take profit happening right now, okay? Bunch of stop losses happening. Bunch of breakout traders hopping in. That's the time you should be getting out. That's the being one step ahead of the markets. Okay, we talked about this last week on oil, and we were looking at, where would the stops be? Where would the take profits be? Well, there'd definitely be settlement. There'd be breakout traders and everything else. But let's look at where would the stops be. Okay, let's just check all of this out We got these traders coming in overnight. Things are all oscillating around. They're starting off early in the morning, okay? And let's see, what do we get up to? Because this will be really curious to see how all this works together. Got up to 102.21. Okay. And then now let's zoom the chart a little bit down here. And there we go. Okay, so first I'm just going to put a marker right at the high right here. Now let's go back and look at what's going on. Traders come in, and I want to bring this back till we're not hitting on this line. Okay, so it's bouncing off this, bouncing off this, bouncing off this. Okay, level. It busts through it. It's staying below it. And so we watch and see what happens. It's moving forward. It comes back up. Look what happens right here. Look at this volume. Look at how we have the volume going on. Look at that. This is 4 a.m. in the morning. It comes back up. These are a lot of people that are excited to get out. Okay, maybe they were long. They were playing a support level. And it just blew right through it. And it came back up. And they're like, oh, thank goodness I'm out of the trade. Okay. These are also people looking for a potential, breakout up here. And so we keep scrolling forward. We look at the level, see what's going on. Comes back up, nails it again. Obviously, it is a magnet price in a lot of different ways. Comes on down and just drops hard. Okay? So now you're the short trader over here. Maybe a lot of these traders, there's traders that went short right here. There's traders that went short right here. There's traders that went short right here. If that's you and the market's going down, 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 then where are all your stops? You're going to have them all along the way, and that's why it went so fast, because it hit stops here, stops here. This is where it really started picking up steam. It hit all of these stops, all of these stops, all of these stops. We'll talk about it more on the Diagnostic Trading Hour later today. We'll see you then.